Joining me now, Lido Advisors President Jason Rotman, along with Countdown to the Closing Bell host Liz Claman, who's standing by at the New York Stock Exchange. Liz, we were up 176 points out of the gates this morning. It was all confetti, a new year, and then all of a sudden, oil prices started to turn south and took the markets with them.
Well, I'm glad you didn't blame me. On this first trading day of 2017, we've seen an epic fumble here, the kind that would get football teams in the National Football League in real trouble here. We had been up about 176 points for the Dow Jones Industrials. Look at us now. I mean, avert your eyes, avert the children's eyes. We're only up 25. The Russell just turned negative. S&P is clinging to gains of about 8 points. And yes, you could turn to oil at the moment because oil had been jumping to about 18-month highs. And then, of course, we saw all of that fumble, and that's where the tumble began. So from fumble to tumble, Ashley, the dollar followed. The dollar had been at 14-year highs. We've seen a reversal there. It is now negative against the yen, which earlier today it was higher. So it seems to be that most of the indices are falling into place at the moment, but let's just call it flat for now. Flat,
making us grumble. I'm just going with the theme. Let's bring in Jason Rotman. Jason, look, maybe there is some sort of psychological resistance at this 20,000 level on the Dow. Are people taking some profits perhaps as they wait for Donald to deliver on his promises?
You know, I don't think people are really taking profits per se, but I just don't think there's any new buying. So, for example, there's no new buying. It's not like the market's down 2% today. It's just up a little bit versus up a lot. So I think that's a good sign that we're still in a bull market. I think the main driver, if you want to call it that, for this week is that there are no drivers. So this is just going to be a classic technical range trade, nothing too exciting.
But Jason, where do we eventually go? You still feel like we're going to have this, relentless march up?
I do. I think the first, call it 3 months, the first quarter of the year, you're going to see fear of missing out, buying FOMO, they call it. I think people are looking at a long-term stock market chart, and they're saying this rally is not done. It's going to keep going higher. I want in. And then really fast forward towards the summer, we really need to see where inflation and interest rates are at, because that may cause headwinds if inflation really does get out of the bag.
Jason, isn't that precisely when the more experienced investor gets out, when the FOMO trade comes in, that fear of missing out? Because retail investors actually have not fully gone in. I was looking at some data that we're actually going to go deeper into. Woohoo! I know, it's so exciting data. It shows that week after week after week last year, we saw redemptions, people pulling money out of exchange-traded funds and, of course, mutual funds, except for the final week of the year. And I begin to wonder, is that what, and I don't call it this, other people call it the slower, quote, dumber money coming in too late. I still think that there, with Jason, are many things in place, including the optimism of President-elect Donald Trump, that will propel this market. But again, a lot of those ideas don't come into real play until 2018.
That's very true. But, Jason, Donald Trump will have his inauguration in, 17 days now, and there's going to be a lot of, well, you could argue volatility in Washington, and I would imagine that's going to translate to the markets as well.
I humbly disagree. I mean, for example, if you look at the economic data this morning, there was an amazing U.S. manufacturing report.
Yeah.
Housing is still strong. Everybody's looking for Trump's promise, in a sense, of GDP to, go to 3.5%. So I think it's going to be a while before the dumb or the smart money really starts to get out in droves.
Fair enough. We'll leave it right there. Liz, thank you very much.